Yep, we're live. How you doing, friends? It is Monday, November 25th, a little bit past 7 o'clock. It's actually 7:16 a.m. Eastern Time. And this is the Zero DTE market analysis, our situational analysis we do every morning to figure out exactly how we're going to treat this trading day. And the three principal things that we're looking to do are figure out what direction we're going in, because we're putting on a directional out of the money butterfly with asymmetric risk to reward. So we need to figure out what direction we're going in, what level of volatility, what's the volatility regime, which will tell us the range of widths that we should consider for our butterfly. That will effectively put us in a proper risk adjusted stance for that level of volatility, that level of gamma, that level of premium decay. Typically, when there's very low volatility like there is now, starting this shortened Thanksgiving Day weekend or week, I can't talk this morning. There's not much to expect on a Monday morning like this week. We're only going to have really 3 trading days. Friday, I guess, technically has some markets open, but we won't be here, so it'll be a nice long weekend. Black Friday is coming up, so take a look for your favorite Black Friday deal. However, Monday will be relatively subdued, and we'll take a look at the economic reports in a moment. But Tuesday and Wednesday, we'll try to pack in all the economic reports they could normally put in an entire week into those 2 days. So there may be some heightened volatility there, and an opportunity for some good trades leading into Thanksgiving. But today, not so much. So let's get started. Oh, again, price direction, volatility, and then entry setups. Entry setups based on our analysis of the market profile to show us market structure. And we want to see where, if we're going to be going long or in the direction of long, then we're looking for a pullback into market structure and then find support. And so we'll show that as well. So first, let's get on to the direction. The direction is pretty obvious this morning. Well, not so much with the SPX because it's not showing me what's happening right now this morning. However, it is pretty clear that we're starting to move in an upward trend. But if we go to the ES, look at this lower left-hand one, or any of them, you'll see that the ES is gapping up this morning by about 15 points or so. So there's something going on in the market. They feel extra exuberant. So the trend definitely is bullish. So we'll be looking at a long call fly, out of the money long call fly this morning. All right. So let's take a look at the VIX. The VIX is down from the past several days or last week, where we were routinely right on the edge of zombie land and Goldilocks zone, right around 17, actually just a little bit below it. But now we've dropped down maybe about 6 or 7% down to about 15. That would imply that we should be in the 10 to 20 range, 10 to 20 wide range for our butterflies. So we want to see, should we be on the low end of that range or the high end of that range, and that will be determined by our big ass fly debit, which we scale up here at the top of this chart. You can see I've got it all color coded for the different widths. You can see on Zombieland we should be considering 10 to 20 wide. But now let's take a look at where that debit lies so that we can see which end we should favor. Should we favor 10-15 or 15-20? Right? And we'll do that right now by going to looking at the big ass fly. There it is. Oh, we're up to 30 now. Last week we were routinely 25 or below. I think there was only one day we were slightly above 25. But 29, 75, 30, that's much higher in the range that that we're used to. So at least over the last week. So we can see clearly then that 30 now is on the low end of the width scale, 10 to 15 wide. So really what it's saying is that there's higher gamma, there's less premium to collect because premium has accelerated due to the higher volatility, lower volatility. Again, can't speak. So that means trade smaller today. Now we may get a reprieve on Tuesday and Wednesday. We'll take a look at that in a second, but as it stands right now, it doesn't make a whole lot of sense to take extra risk on a day like today. And there is no big ass fly today because our standard is that the debit needs to be 25 or lower, and that just didn't happen. Or, right around 25 or lower. And if we look at the NQ, that's also an alternative trade, there's typically more volatility in the NQ, but even today we can see that we're usually looking between 55 and 60, and it's well above that at 66.75 or 67.75. So there is no big ass fly today, just small out of the money flies looking to reduce our risk, and that's the best place to be as it stands. So back to the big head. What I'll do is I'm going to look at, let's take a look at something else that I just want to show you, a typical week last week, but I want to comment on it. So this is my performance for last week, and by all accounts, it's pretty good. Good win rate. Let's see, there were 1, 2, 3, 4, 5, let's see, 141, 150. There were 11 trades and only 2 losses, so a particularly high win rate week. But that's because we had more of these big ass flies. These are the ones with the big debits to start off the day. But you'll notice that while the performance is really good, making $3,000 in any week is not a bad week. One thing that you can see is that there are no real standout big wins, and what I mean by that is a win that's up in the $1,500, $2,000, $3,000 range. And the reason for that, let me go back to the big head and just talk about this a little bit. The reason for that is that we haven't had an opportunity to get what we call a pinned trade. From a probabilistic point of view, those come around 1 out of every 20 trades or so. But that's, again, probabilities. Those probabilities tend to go down when we're in lower risk or lower volatility environments. When volatility moves up into the Goldilocks zone and the VIX is up around 25, 26, 27, those pin trades come far more frequently. And so we'll be able to see much larger returns, like in the, per fly in the $1,200 to $3,000 range. So while I'm not unhappy with the results, in fact, I'm elated. It's what we're doing. We're getting risk-adjusted returns is what I'm trying to say. And when there's low volatility, that's what we expect. We expect lower returns, but the frequency is about the same. None of that really changes. Although now we don't have the big ass fly to help us out. We're just relying on the single out of the money fly. So those are the things that you have to accept as a trader and understand that those are the conditions. You have to play the conditions. You can't force the market to give you something you want because, quite frankly, the market doesn't give a damn what you want. So in any event, let's take a look at the economic reports coming out this morning. And we'll do that. No, that's not right there. We'll go back to... Do I have it even showing? No, I don't. Well, anyways, we'll take a look at that tomorrow morning. It'll be more relevant. There are no economic reports this morning. There won't be any on Thanksgiving or Friday. So they'll all be crunched into Tuesday and Wednesday. And so those should be exciting days, and I'm pretty sure that we're going to see a big-ass fly on one or both of those days. Wednesday in particular, there's an opportunity because Fed minutes will be released at 2 o'clock on Wednesday. So there will be some heightened anticipation for that, and volatility will rise into that event. And that's really a great time to see the magic of the 0 DTE strategy. So anyways, that's about it here. Hope you all have a great Thanksgiving Day, or Thanksgiving Day when it does come. I just want to say that tomorrow, or I'm sorry, Wednesday. Man, I am way off today. Wednesday actually is my 33rd wedding anniversary, so looking forward to that as well. So there you go. It's going to be start off with a subdued week, and then moving into Tuesday and Wednesday because of the crunched economic reports and some anticipated reports like the PCE and others. We're going to see some heightened volatility, so more opportunity. For now, take it slow, take it small, and we'll see you tomorrow. Take care.